am here with my special guest, Mr. Brandon Ramsey, for the highly anticipated video that you all have asked me about and you've been waiting for. This video is going to be about credit and how to repair your credit. I told you all that I would be bringing someone that had a credit business and can assist you in repairing your credit. So without further ado, I would like Mr. Brandon Ramsey to introduce himself and talk about what he does, and then we'll go through the questions that you all submitted to us.
Sure. My name is Brandon Ramsey, and I am the owner of Ramsey Credit Services, based out of Atlanta. We assist individuals who are looking to either repair their credit to purchase homes or to purchase vehicles. I've been doing this for about 7 years now. Prior to doing so, I was an automotive finance manager at a few dealerships here in Atlanta. Left that and started my own dealership and started working on people's credit to get them approved on the loans to purchase vehicles. So when we are looking to repair your credit, we're not looking to just wipe everything off of there. We're looking to actually salvage the accounts that you do have on there and design it so that when you go back to your loan officer, you have a bit of stability on your report, which is very important, and get you the best interest rates and the most amount of money possible.
Nice. And how I was introduced to Brandon is from my realtor, and her IG is Maya_shows_homes, and she introduced me to him. As you know, I recently closed on my first investment property, which we are in, that is on Airbnb. Actually, we have a check-in that's coming in about 30 minutes. So we wanted to shoot this video again because, again, I know that it has been long awaited. So thank you all for your patience. But Brandon, thank you so much for coming on and talking and really giving people the information that they are, that they have requested. So what I would like to do is go through a couple of the questions that people have asked. And hopefully, you'll find this video insightful and helpful, and then they can reach out to you after the video for services. So let's start with the first question. So someone wanted to know, how can they get late payments from 2017 off of their credit report?
There's a few ways. You can just do it. We can just do a general challenge of the account or the late payments, depending on their relationship with the lender. Let's say if they've had this lender for quite some time and just stumbled on a few late payments over a small period of time, what they can do is ask for a goodwill letter, or submit a goodwill letter. And what that is saying basically, hey, I'm a longtime customer of you. I had a bit of financial difficulty. However, I redeemed myself and would ask for you to remove these late payments because I'm in the process of purchasing a home or purchasing a vehicle or something like that. Lenders typically want, when you've got somewhat decent credit or credit period, when they're extending loans to you or credit card or whatever form of credit to you, they're doing that hoping to retain you and give you more money. So when you ask for small favors and you've shown yourself, to be able to manage your finances properly, and you just have a small hiccup, here or there, typically they're willing to work with you because of they don't want you to go shopping around with other lenders.
Yeah. Now, the shopping around with other lenders is interesting, because how often do you see that, when you're shopping around for other lenders, does that affect your credit if you're currently getting those inquiries on your account?
That's like the main question I get from everyone.
Really? That was a good one, Sharif. That was my question.
So, yes and no. Experian, Equifax, TransUnion, the three main bureaus have updated their scoring systems here recently. And what they've set it to is to the tone of if you're, shopping in a specific industry, so you're credit card shopping or you're, in auto loan shopping or whatever it may be. Once that initial inquiry hits, you actually have it's between 30 and 45 days, depending on which bureau, for additional inquiries that will not affect your score. Inquiries typically last for about 6 months as far as their potency of hurting your score. They drop you anywhere from about 5 to 12 points. So if you shop credit card, then you go auto loan, and then you go home, you're gonna be affected 3 times. But if you go credit card and you submit for 2 or 3 other credit cards, your score's not gonna drop 3 times, But at the same time, you don't want to start racking up all these inquiries, because of when an actual lender looks at your report, it looks like you're begging for money at that point. You know what I mean? You went here, you went here, you went here. You know, why? What? You know, you got to think about it.
Doing?
Yeah. If I'm giving you money, I don't want. Why are you asking all these people for money? You know
I didn't think about it like that.
Yeah,
Okay.
So, yep.
That's a good insight right there. I never thought about it like that. All right. So the next question is, when viewing a credit report, how do you know that something is off with your report? Or how do you know what something is on your credit report, such as labels, abbreviations, especially if someone has opened the credit, especially if someone has opened the credit in your name, but you don't know what it means.
So when I look at my report, you know, most of the time the stuff on there I recognize by the limit set, or you know, the time period. You can look for the date and the limit that the account was opened on. The abbreviations sometimes throw people off because of, let's say if you got a credit card from Home Depot or you know, Macy's or somewhere like that, they're not the ones that are actually extending the credit.
Okay.
So the issuing bank may show up on your report. So you might see SYCMB, and that's Synchrony Bank. You know what I mean? And a lot of people don't know that. So they say, I don't know this bank, you know, this bank, this got Florida address, this, that, and the third on there. Well, what you can do at that point, if you don't recognize it, is at the bottom of your credit report, if you go on, like, if you print your credit report, there's an area for each item, you know what I mean?
Yeah.
And so at the very bottom of it, it'll say creditor contact. You can contact them, take the account number, and reach out to them and say, hey, you know, I need more information on this account that's reporting on my credit.
Okay.
But typically just looking at, like I say, just looking at the limit, the date opened, you know, and you can pretty much recognize it, you know what I mean, unless it's closed or something like that, but yeah, that's about it.
And so bottom of the page, they can call and find out exactly what it is. So if someone does open credit that's in your name, but you may not have known about it, or you don't know what it is, you can follow those steps.
Yeah. Now, you can also look at the inquiries. If you start seeing a whole lot of inquiries, you know, in a short period of time that are not that you, I mean, because it'll show the store, it'll show the bank, all that stuff on your inquiries. If you look at the dates and you say, all right, well, I didn't do all this stuff, then, you know, call those places and then file, you know, identity theft.
Okay.
Yeah. So you go
FTC.
FTC.
That's a whole
That's
discussion.
Yeah.
Okay, so this is actually one that I had a question about too.
Yeah.
Is there a way to get medical bills that went to collections off of your credit report?
Yeah. Actually, medical, I'm giving y'all my game.
Oh, we like the free game.
So medical bills, honestly, for me, are the easiest to get removed, typically because they are violating HIPAA, the Patient Privacy Act. And so a lot of times when they go to collection, not every time, but a lot of times when a doctor or, you know, a hospital or something sends that bill off to collections, what they do is they also send off the bill that shows what procedure was done, and that's violating your rights with HIPAA, because if you have not authorized for your information to be released to these people. And so when I challenged them, man, I give y'all I charge y'all $29.95. So
You can just give us a little.
So when you're challenging them and they show you this bill, you know, I mean, I go threaten the damn doctor, you know what I mean? Because of
see, that's why y'all gotta book him, because he gonna fight for you.
I mean, you go after them, you tell them that, you know, I haven't authorized for my information to be released, you know, how did you do so? And I mean, they can be sued, you know, if it's been done too many times, they can lose their practice. And so a lot of times they're more lenient to, you know, get that off of there or agree to remove it.
Okay.
Yeah.
And so that's, I mean, that's really good, really good insight, because I don't know that anyone would just know that could happen. I would think, okay, if it goes to collections, I wouldn't think that that's a violation of my rights or anything like that. So that's great insight.
A lot of times, collectors are, that's why the Fair Debt Collection Practice Act was put in place, because collectors violate you in so many different ways. A lot of times they're not even supposed to be collecting in the jurisdiction that they're collecting in, which is another reason. You know, there's a lot, that's why I say call us, because there's a lot of different.
That's why you gotta mind your post.
There's a lot of different stuff that they do that the average person wouldn't know to be protected from.
I would not have known that. Okay. All right. So, next question. How does not paying your student loan debt affect your credit score?
So your student loan, that's a tricky account, because if people get it, and you would think because of if I'm paying it on time, typically, you know, and it's this large amount that's benefiting me. tremendously. Student loan is it's like a neutral debt until proven otherwise. So until you mess it up, then you're not, I mean, you get credit for it, but it's not like, you know, when you're 18, you go out and apply for a student loan with the intent of doing anything with it, like an auto loan or, you know what I mean? So when you don't pay your student loans, it's affecting you because it's going against your payment history. Your payment history is 35% of your score overall. And so when you start missing those payments, then you're going to be negatively affected greatly because of, you know, you got late payments on but when you're paying it on time, you get credit for it. But like I say, even when I was doing, you know, auto financing, I would talk to a lender on the phone trying to get someone approved, and like, oh, they got a student loans, you know, it doesn't really give you any type of significant push as far as like when the lender's looking at it versus like a regular loan or a credit card. You're getting credit for it because of your payment history, but you're not really getting anything else from that. You're not, you know, you can't go apply for a home based off your student loan history or something like that. Yep. So. And
that's what I was wondering too with, you know, loan providers, when they see a substantial amount of student loans, are they like, ooh?
Yeah, it scares them. Depending on, I mean, it depends on, you know, how far, if you got it deferred, how far out it is, because it's going to go into your debt to income or payment to income. There's DTI or PTI, you know, depending on, you know, the total amount of the payments that you have versus your income, or the total amount of debt versus your income. Typically lenders want to see somewhere, I mean, depending on your credit score, anywhere from 30 to 50% DTI. So if you make $100,000 and you've got, $200,000-$300,000 in debt, you're higher up on that list versus if you make $100,000 and you got $30,000-$40,000 in debt. Now it's like you're able to afford more stuff. You know what I mean? So if this all collapses, you know, your credit is based off risk. So if everything collapses, am I going to be able to get my money back? Is what lenders are looking at. So when you got a whole lot of student loans, it scares them a bit, but you know, they're not. If it's deferred for a few years, they're not really too worried because you're going to make this, you know, this payment before that, basically.
Right. Yeah. Now, this is not on the question, but I know people want to know credit scores. So just ideally, when you're talking to all the lenders that you're connected to, what is the range that they're most likely looking to, not most likely, what is the range that they're...
They want you 700s, man. They want you
700 is ideal. Okay.
700, 720s.
700, 720s.
Yeah. With history, though. The thing is, people right now are buying all these trade lines, you know, and spending all this money is stupid because if you got a blank report with one account and you're 750, you're not a real 750. You know, you're a lucky 750.
Yeah.
They call you a thin file. When you've got significant history, 3 to 4 open trade line. Trade line is any account reporting on your credit. It's not when you go buy it, you know, or those authorized users. Those are a form of trade lines, but any account reporting a line of credit on your credit report is a trade line. And so lenders want you to typically have 3 to 4 open trade lines reporting because that shows your payment history and it shows how responsible you are with managing money. When you are dealing with a lender, when I would get people approved, if you were 720 or up, most of the time I get your computer approval. I didn't have to talk to a lender because it's automatic. Yeah. When you're in that low 600 range, now they want to see proof of income. Now they want to see, you know, because they want to make sure that, you know, you can manage this. Mid 6s, 640 to 680s, they're okay if you're, now it's more, there's legs of credit. So now it's like, well, how much do you make? You know what I mean? What other factors are going to either positively contribute or negatively contribute? Gotcha. So when you're in the 7s, they trust you. Okay. You know, yeah. So anything under a 7, you definitely need to be getting your credit repaired for the most part. Okay. Yeah. And I know, I mean, that's a lot of people. I mean, it's just what it is. So great. Thank you for that. No problem.
All right. So the next question, with getting a new car. So the question is, with getting a new car, with me paying off the monthly payments on time, increase my credit score and put me in a better position to purchase a home, or does that set me back?
So anytime that you're paying something on time, it's going to definitely increase you. Looking to purchase a home, though, if you just got a new car, that's typically backwards because of, the car is going to be easier to get than the home. You know, when a lender is looking at approving you on a home, they want you to have no debt. You know what I mean? So anything that you're adding to it is negatively affecting you, because now you're going back towards that DTI that I was talking about, that debt to income. And so when you start adding, you got a brand new loan, now they haven't even seen if you're able to manage that debt. So now you're asking for me to put another $800 to $2,000, depending on the price of the home, on top of a debt that we're unable to see if you can manage already. So what you want to do is you want to get the home first, and then you get the car. You get the car afterward. The car, if your credit score is good, they're going to approve you on it. The home, you know what I mean?
Different. It's more layers.
Completely different. Yeah.
Now, so if this person has already gotten the car, and now wants to get it home, is there a certain amount of time that they should wait, or they just need to come see you?
I mean, not necessarily.
Okay.
Go apply. You know what I mean? If you've got negative stuff on your report, then come see me first. Make sure your balances are right. That was something else I was going to say on the last question. 650, 680. Sometimes it's not even that you got negative stuff on there. If you're 30% or higher on your credit card balances, that is affecting you negatively as well. You know what I mean? So if you've got a $10,000 card, then you want to make sure that you're always at 3,000 or below. You know, always, because of you're losing points. Your 35% is equivalent to about 165 points.
Oh, wow.
Once you go over that 30% threshold, you're losing points. So you might go from that 165 down to 140, or down to 100, down to 50. If you're hitting 90%, if your card's at 9,000 and you got a $10,000 limit, you might be getting 30 of those 165 points.
Wow.
And so that's why you're where you are. You have nothing negatively reporting. Your balances are killing you.
That's good, because credit card balances, and
that's
a whole paying off them credit cards too quick, not paying them at all. I mean, interest. I mean, that's the whole.
That's a whole different.
That's the whole
beast.
thing. Yes.
Yeah.
Okay, so the next question was: is 650 credit score bad for lenders? So we kind of already talked about where they should be, but if you're at a 650, I think
it's not bad.
It's not bad.
It's not bad.
Okay.
With the whole coronavirus pandemic going on, actually, the entry level for a lot of lenders right now is actually 650. It used to be 580 to 620, depending on FHA or what program you were going with. But a lot of the lenders that I'm dealing with now are asking me minimum to get their guys up to 650 just to get them approved.
Okay.
So yeah.
So 650, the new, and that's probably because, again, people aren't paying their mortgages. They want some more.
It's because so credit is all risk-based.
Okay.
And right now, when everyone's losing their jobs, you know what I mean? So the lenders are wanting stuff to be a lot more safe.
Tighter.
They want it to be they're a lot tighter on who they're lending to, because of, if you've got a 700 or high sixes, then chances are that you've been doing a pretty good job of managing your finances and your debt. And so if you're lower sixes, you've had some hiccups. And so with all this going on, they're really stressed about who they're giving money to.
Which makes sense. Yeah, especially in today's time, and no one knows
Man,
how long we're going to be
in
this situation.
Go home, man. Get that car.
Yeah. Okay. So, the next question is, what are red flags on a credit report to look for?
For the lender or for an individual?
Probably let's do both.
So, lenders are looking for anything that's essential to life. Once they see a cell phone, only time that you see a cell phone on your credit is when you messed it up. Cell phones don't report regularly. So if they see Sprint, T-Mobile, or something like that, that's going to be an automatic red flag. Auto loan, late payments, or charge-offs are typically like automatic issues. And apartment complexes or mortgages, because of you have to have a phone in this day, you have to have a car, and you have to have a home. And so when lenders are looking at, you can't even manage, the stuff that you have to live. I'm not going to give you extra money, to go out here and mess me over as well. For individuals, it's like I got a list of stuff. If you got your credit clean before and you got fraud alerts on your credit, that's going to hurt you. If you get approved with a fraud alert on there, you're getting less money, because of fraud alert typically means that, what it technically is someone's ran your credit or violated you in some fashion, and you're raising a red flag that anytime that someone approves you for credit, they got to contact you first. What lenders know is everybody's claiming identity fraud and this other stuff, and so when they see a fraud alert, it scares them because they're like, man, you know, you're gonna get this stuff wiped off your credit. I'm not gonna give you all this money. So if you had credit before, if you had credit repair before, a lot of guys don't know what they're doing, and they left fraud alerts on there, which will be in the top section of your credit report. You'll see something that'll say, contact me first before extending credit or something like that. You want to call all these credit bureaus and ask them to remove that because that's hindering you from getting approved or getting full amounts. You want to look for a lot of, like I said earlier, a lot of inquiries that have happened in a short period of time. Someone might have, obtained your stuff black market or however they got your, or however they got your information, and they're running you through, through the bureau. Through different agencies trying to get, credit listed in your name. Addresses are really big. One of the guys, I was fixing their credit, and there was an address reporting from Florida. And the guy's like, I've never even been to Florida.
Wow.
You know what I mean? And what happens is anytime that someone applies for something on your credit report, you'll see the job, address, name, all that stuff, and then the inquiry from where it came from. Whenever you apply for credit, whatever you listed is what's going to report on there. So if they have an address listed they were trying to get something approved and sent to this address, in that case in Florida. So that's a red flag. So then you want to, call whoever it was applied to by looking at that creditor contact at the bottom, and finding out, when this happened, and letting them know that this wasn't me. And then you want to contact, the FTC, Fair Trade Commission, or the Federal Trade Commission, or that creditor and the credit bureau, and get that stuff pulled off your credit.
Awesome. Thank you for that.
I'm talking too much. Sorry about it.
Oh no, listen, this is all the information that people are asking. When I tell you they're gonna watch this video and be like, thank you so much. Okay, so do places like Experian, are they good to use to boost your credit score?
Like the Experian Boost stuff?
Yeah.
Yeah. I'm not a big fan of them for personal reasons, just because of when you do sign up for Experian Boost, you have to basically allow them to. It's not you're authorizing them to sell your information. That's all the credit bureaus do, is sell your information. This is off subject, but all three credit bureaus, LexisNexis, all they are information reporting agencies, and they buy and sell data. So the main reason why getting your credit repaired is good is because of your file is worth like a lot of money when you have bad credit, because I'm going to sell you to all these bad credit, banks and lenders, and they're going to hit you with top interest rates and charge the heck out of you. So your money's worth more. So your credit's worth more when it's bad. When you go to Experian Boost, and you authorize them, you're giving them access to all your data, because they're reporting like your bills, they're reporting like your utilities, your cell phone bill, like stuff like that, to put trade lines on your credit to report. Does it work? Yeah, because of if you've got nothing on your credit, then adding that stuff on there is putting trade lines, which shows payment history and stuff like that. Are there better ways? Yeah, you can go to secured credit cards like First Progress, which is a secured credit card for people who have limited or bad credit. They report in 2 to 10 days, so you'll have a new trade line on your credit literally like a week after you get approved for it. You can do Rent Reporters, which is reporting that you're paying your rent on time, which puts that on there for you.
Oh, nice! I never heard of that one.
Yeah, there's a
free
lot
game.
of
Credit
Strong.
Yeah.
There's a lot of other ways to do it that don't just authorize people to sell your information.
Which you really don't want people to do.
They're doing it anyway. But
right.
they have their whole little.
Their reasoning.
Yeah, I don't want to give people more.
And then where else could y'all go to get this free game? I don't know. Okay. All right. So our last question is, what are 3 things someone should do to not find themselves with a low credit score?
So, like we were saying earlier, utilization. You wanna as soon as you swipe a credit card, I pay it the same day. I treat a credit card like a debit card.
Okay.
You gotta have a purpose for that credit card. So, in the sense of building credit, as soon as you swipe it, pay it, because a lot of people say, well, I pay it at the end of the month. Well, that doesn't matter, because of credit cards have specific reporting dates. And even though your bill may say that it's not due till the 29th, if they report on the 15th and you have a higher balance at that time, it's going to report to the credit bureaus with that higher balance, which is going to decrease your score.
Okay.
Even though you paid it at the end of the month, that's not going to show. So keeping your credit cards under 30% is really, really, that's like one of the top things to do. Of course, making payments on time. If you can't pay on time, call that lender and work something out with them, because a lot of times they will work with you. They just don't want you to not pay them. So if you say, hey, I'm gonna be 2 weeks late or something like that, that will stop them sometimes from reporting, or just explain your situation. They want to work with you because they want to keep you as a customer. Mm-hmm. So definitely, like I said, making payments on time, and then constantly review your report. If you don't have a lot of credit, then it's time to start building it, because of just taking stuff off is not going to be the answer. Mm-hmm. The point of having credit is to show your financial willingness and your responsibility financially. And so if you only have one thing on your credit report, you're never going to get to that high sevens, because of no one can judge you financially. You know what I mean? They can only see that one thing reported. So you want to make sure that you got 3 to 4 open accounts, making sure that you're paying them on time, make sure that they're below that 35% range, and you will continue to grow.
Awesome. I mean, you've given some good. I know you probably gave some more information than you probably were intending to give. This is all good. So guys, again, we don't want to be too long. We did really want to go over the questions that you all submitted to me. So thank you guys again. Tell them how they can get in contact with you and your website.
Yep, so we are at RamseyCreditServices.com, or you can reach us at 877-515-0955. We're in the office Monday through Friday from 10 a.m. to 5 p.m. Or you can reach us at customer support at RamseyCreditServices.com if you have any specific questions to ask.
And the good thing that Mr. Brandon Ramsey is doing for all of you all who watched the video, if you are in need of his services, if you tell them that you saw this video, make sure you mention my name, Cherie Oates, and you will get 10% off of his services. Yep. So again, it's so important. If you want to use his services, which I encourage everyone watching, I mean, seriously, everyone watching, to really take a look at their credit and figure out what they need to do to improve their credit. And that is by investing, shout out to my Black Women Invest shirt, but investing in credit restoration. It's really important, y'all. So again, list my name, or let him know you were referred by Cherie Oates, and he'll give you that 10% discount. We want to thank you all for listening to us. Again, sending us the questions. Please like and subscribe. I plan to do more of these videos, so let me know in the comments what else are you all wanting to know as it relates to the home buying Airbnb property. Again, this is my Airbnb, and the only reason I was able to get another home is because of my credit. So when I tell you I'm so serious about really paying someone to look at your credit and to get it to where it needs to be for lenders. So again, thank you guys so much. Black Women Invest, also having Black Men Invest. I need to get you a shirt. I have it. If you are interested, let me know. You can find me on social media. Cherie Oates, SHEREEOATS, Cherie Oates on Instagram. And I'm going to tag all your information at the bottom of this video. And this is, this whole YouTube thing is still kind of new to me. So I'm so excited to be like, subscribe, drop your comments, all that, becoming a YouTuber. But thank you guys again, and we'll talk to you later. Bye.